Hey guys, welcome back to my YouTube channel, and for this episode I'm actually going to be showing the best performing gold company in my portfolio. So I figured when I did a dividend video, the top 10 best performing dividend video, I should actually put one also out in my growth portfolio actually. So I'm going to be showing you top 5 growth companies I bought that actually also moving my portfolio up. So in this video I'm going to be going to my Robinhood portfolio and also my Weibo portfolio, which I also have a growth company there also. So without further ado, let's jump right straight into this video. So now let's go to my Weibo portfolio first. So as you can see, the portfolio is valued about $1,909.64, and as you can see, I own about 4 growth companies in the portfolio, and the one I'm going to be talking about today is actually Lucid and Neo in this brokerage. So as you can see, Lucid, I own about 26 shares in the company, and it's trading around $53.22. And as you can see, my total cost for the share was around $506.07. I wish I picked up more shares, but it is what it is. And if the company goes back down to a price I'm comfortable with, I would actually be buying more and more shares in the company. But as of right now, I'm up about $877.65, which is about 173.43%. So which is actually really good. And also the next one is going to be Neo. So as you can see, Neo, I'm up about $21.86 in this portfolio, which I actually have some Neo in my other portfolio on Robinhood. And so on this portfolio, I'm up $21.86. So which I have an average total cost of $214.30, and I own 6 shares in this portfolio. Actually, as you can see, I also have some bad eggs in the portfolio. I wouldn't really call them bad eggs, but they're actually down at the moment. In the portfolio, I have TTCF, which I'm down $30. I own about 8 shares. And I also have a Shift Technology, which I own 33 shares, and I'm down about $119.36. And I don't think I'm actually going to be selling those companies. I think I'm just going to leave it over there. I'm not really that exposed into the company, but also I think those companies are going to do well in the future also. So now let's move into let's continue this video in my Robinhood portfolio. So as you can see, on my Robinhood portfolio, it's valued about $58,000. This comprised of dividend and also growth companies, but mostly focused on dividend companies. So I own about the first one is, which I'm up about, is Tesla. As you can see, I'm up about $1,104.79, which is about 81.65% of the portfolio. So as you can see, I own 2 shares and 2.146521 shares, and I own some fractional shares also. But Tesla at the moment is kind of really high up there at the moment. I should be taking some profit, but at the same time I just only own 2 shares. But I would be holding those shares for the time being. So if Tesla goes back down to a reasonable price, I'm going to be dollar cost averaging into the company. And let's move to the next one, which is Revolve. This is actually one of my favorite gold company. I should have bought a lot more. So I own about 15 shares. I bought $13.39, and as of last week, I was actually up about close to 1,100. But today, due to the sell-off, so now I'm up about $941.75, which is about 469%. So it's like I've already 4x my money in the company. So let's move to the next growth company, so which is also Neo. As of right now, I'm up about $67.35, and I own about 21 shares in the company. Average cost of also $36.17. Market value of $827.37 shares. I think I'm actually going to be selling all my Neo positions, but I'm not sure yet. I'm still trying to do a little bit more research before I go into that part. So but there's a big chance I'm going to be selling all my Neo shares and actually just putting the money into Lucid instead, because I think Lucid has more. I'm not saying Neos is not gonna make us a lot of money in the future, but at the same time, there's been a lot of not certain things about Neo. So there's been a lot of up and downs in the company, so which I do not really like, the uncertainty and uncertain things about the company. So I think I'm going to be taking my money out, but at the same time I'm going to do more research. So I'm not saying you should take your money out of the company, but at the same time do a little bit more research into it, and if you feel like doing it, then give it a go and invest it into a more solid company instead. But also I haven't given this a green light yet, so I'm still going to be doing a little bit more research before I do that, before I sell those stocks. So the next one is actually up about $69 in Uber for owning 6 shares. So this is a small portion also on one of the growth stocks. I started buying. I had 2 Uber shares first, which I owned at this was pre-pandemic, before the pandemic. So I owned about, I think, 2 shares of Uber, and which was actually, I own about, I think, $39 each. But actually after the pandemic happened and I started picking up some shares at a really cheap price, so which actually brought my average cost down significantly. So but I haven't buy any more Uber stocks since then, but I don't really see myself selling the stocks at the moment. So I think Uber might, as you can see, it has an 89% buy rate at the moment. I think the company is going to be worth a lot in the future. So as of right now, if I actually see a bit more downturn, I know there is a downturn right now, I should be picking more up in the company, but I don't think it's just going to happen tomorrow like that, within the snap of a finger. But I think in the next 2, 3, 5 years, 10 years, there might be a big change in Uber, and it might actually worth a lot more if the company keeps progressing. So and also I want to shed light on the losers on the stocks. I'm actually losing on the company in the growth section of my portfolio. So which is actually, as you can see, Coinbase, I'm down $36.22. Corsair, which I own 7 shares of, I'm down $29.74. Netflix, which I own a fraction shares of, I'm up about $18.32 shares. Actually, Netflix has been rallying since the variant that was actually found in other countries. So those pre-pandemic stock, those stock that was actually stocks like Netflix, Disney Plus, stocks like that was actually up I think on Monday, and also last week once the COVID variant was actually announced. So also moving on, Alibaba, which I own 2 shares of, I'm down about $104.28. This one, Nicola, I'm actually down about $37.27 shares, and that seems to be all. So I just don't buy. Most of my investment basically goes into dividend companies, to build a passive income. But at the same time, I expose myself a little bit more to a growth section, just the companies I see are going to actually take, gonna make me a lot of money in the future. Like Tesla, I think actually going into the electric version, going into the electric parts, I think is going to be a big thing in the future. I don't think there's going to be a lot of vehicle depending on gas anymore. So those are things I actually try to think about and try to expose myself into some of those company, picking up few shares from those company. And also I still buy a lot more dividend companies instead, but at the same time I do buy just a little percentage of my money goes into growth companies. So that seems to be all for this video. If you like this content, hit the like button down below and hit the subscribe button for future videos, and I'll see you guys in the next video. Thank you guys for watching.